everybody. Welcome back to VCTV, Venture Capital TV from La Token. I'm the host and moderator, Sunny Mohanty. I'm also Regional Director of La Token based in Singapore. I'm back today on another episode, another session of VCTV, as I love VCTV a lot, after my NFT session. So today on this session, I'm going to discuss about totally different subject. It's about raising funds for startups in emerging markets or developing nations. So I've got a great panel today, and let's have a quick round of intro of the speakers today. And you go. Hello, everybody. Welcome back. And I'm very, very glad. I'm very happy to have each of you today on this panel to discuss investments in startups from developing nations. So let's just start with a quick round of intro. Tushar?
Thank you, Sunny. It's my pleasure to see you back since some time, and also my pleasure to be on the same panel as Keshav, Karthik, Harsh, Vandana, and everyone there. So myself, Tushar Kansal from Kansaltancy Ventures. We are a company into venture capital, and we help venture capital funds get access to funding, and we also help startups get access to venture capital funding. We are connected to more than 325 global investors, including from Dubai, Singapore, US, UK, Hong Kong, and India. Myself, I have a background in Deloitte and Touche private equity practice at Brand Capital, which is the venture arm of Times of India Group, and also headed treasury at the Russian telecom company MTS India, and raised $2.5 billion for the company in 3 years, and was CFO with a logistics company owned by Guggenheim Partners. Happy to be back and discussing this crucial this topic today. Thank you, Sunny.
Thank you, Tushar. Obviously, you are one of the core members of VCTV family. So welcome back.
Thank you.
So next I have a speaker who is new on my show. So I'm glad to introduce him. So Keshav, over to you, please.
Thank you, Sunny. It's a pleasure being on the show. Thank you for the invite. My name is Chenna Keshav Adya. I go by Keshav. I'm based in Dubai. I was in London for about 15 years, working for large corporates, investment banks, such as Morgan Stanley, HSBC, Lloyds Banking Group, primarily focused on fintech, post-merger integration, and execution of strategy. I've also been a founder on 20-odd occasions. I've had a number of exits and also a number of failures. So I like to, call myself, I would say, a seasoned founder. Over the last 5 years, I've been an investment banker, working with small, mid-sized businesses on pretty much the whole spectrum of corporate finance, fundraising, equity debt, that is, mergers and acquisitions, corporate strategy, and also facilitating companies on their entire growth cycle. I've also been working with PE and VC funds on fund placement and assisting them with scouting for startups, in addition to raising a fund myself, focusing on blockchain startups and prop trading, which is in the works. That's me, Sunny. Pleasure to be here. Thank you.
Oh, that's good to know. Founder turn investment banker, investing into blockchain startup. Interesting. And welcome Keshav to my show. Okay, next I have Karthik from Dubai as well. Hi Karthik, how are you?
Hi, pleasure. It's been a while. I think this is the 137th or the 134th edition with you guys, and it's been a pleasure for the last 1.5 years. I come in from the Middle East. I represent a large retail business by profession, and I also am an investment officer for a large family office based out of UK, actively investing in healthcare, fintech, edutech, and a lot of government-to-government schemes. Thank you so much.
Thank you, Karthik. Obviously, guys, Karthik is very humble, but Karthik is also one of the core members of the VCTV family, and always pleasure to have him on VCTV and listen to his insights. Thank you, Karthik, for that intro. Next, I have Vandana. Let's just hear from Vandana.
Thank you, Sunny, for having me here over and over again. And it's my pleasure to meet you after a very long time. Actually, I've been waiting for, this session because whenever you are the moderator, the session becomes very lively. Also, I want to thank the entire team of VCTV, Latokan VCTV, for setting this up because it takes a lot of efforts to coordinate with speakers and arrange these kind of VCTV shows. Coming to my intro, I had my own family office in Singapore and Jakarta. I worked as an investment banker and advisor to family offices and angel investors in Jakarta, helping startups from a diverse background from fintech and B2B tech all the way to consumer startups. I was raising funds for them and providing them with a range of services, just as Convanto does today. After 15 years of staying in Singapore and Jakarta, I came back to India. I did investments for a bit and then returned to advisory. That is when Convanto was founded. And today, Convanto is one of the most well-known boutique investments bank in India and led by a female founder. And today, I'm also a venture advisor with Loyal VC, the NCR-led Canadian VC fund, having a core portfolio of 160 investments in more than 35 countries. I'm also a partner with GST Venture Studios, a Silicon Valley-based venture builder. And over the years, I have arranged the funding for startups and growth stage companies in diverse sectors like edutech, fintech, consumer tech, B2B and B2C, agri-tech, health tech, food tech, disruptive and deep tech, as well as non-tech sectors. And please do have a look at my website for the wonderful testimonials written by my clients. This month, I've been nominated as the top 10 women leaders in wealth management 2021. And my expert opinion is often sought by leading business news channels and publications like VCTV, Business World, and I've participated in 150 talks worldwide. And that could be viewed on VCTV streaming sites and YouTube. I'm also connected with 300 investors globally. We are sector agnostic and typically we do $1 million to $25 million. And thank you for having me here.
Thank you, Vandana. Thanks a lot for that intro. Obviously, Vandana has also been a moderator and host of VCTV, and now she's obviously on a different, on the other side as a speaker. So thank you, Vandana, so much. And next, I would like to go for the core family member of VCTV, Harsh. Harsh, welcome back.
Hey Sonny, glad to be back. I'm glad to have you as a moderator as well. A lot of familiar faces, a lot of good part of the VCTV family to see everyone here. Just a short intro about myself. I'm a venture partner with our ventures and a founder of Startup Hackers. We essentially help early stage startups kind of grow their business and scale it to the next level, right? Whether it be marketing and sales through online channels, offline channels, we help them with strategic guidance to help them scale their business to the next level, right? And even for the international expansion. We help startups with the fundraising right the way from about 100 to 100K all the way up to $15 million. And we are completely sector agnostic as well, whether it be fintech, marketing tech, SaaS. Right now, I'm working a lot in the clean tech and the EV space as well, and also in e-commerce SaaS space. So, a lot of interesting work going on right now, and looking forward to have an amazing discussion today. Thank you.
Absolutely, absolutely. And thank you, Harsh, for that intro and welcome back. Next, last but not least, I have Anil, who just joined us after a long break. Hi, Anil. Welcome back. How are you?
Hey, hi, Sony. Thanks for having me. Yeah, it's coming after a long, long time.
Yes, indeed. How are
And
you?
I all well. Last time missed because I was on road. Things are good. I think we are coming out of second wave. Investments are happening. We are seeing more and more startups. So I think we might witness, happy times. I don't know Corona, but investments are certainly happening. And seeing a lot of interesting deals happening in India in this 6 month period. We have witnessed $12 billion coming in startups, so really exciting times. So I run a VC fund. We invest in early stage tech companies, and we are Mumbai based. We do anywhere around $500,000 to 2 million, and go up to 5, 6, 8 million dollars. Currently, we have a portfolio of 25 companies, and we are exposed to blockchain, AI, ML, fintech, insurtech, health tech. So I think fairly diversified portfolio. But the central theme of all our portfolio company, they're tech enabled. So happy to be here. Look forward to share my views. Thank you for having me.
Thank you, Anil, and welcome back, VCTV. Okay, so we all set, I think, with all the introductions of our speakers for the session today. So it's a very interesting topic because as investors, I think obviously every one of you has invested in startups globally, but we're talking about startups in developing nations. So what are the challenges? First of all, I'd like to know what's the difference between operating as a startup or an entrepreneur in a developing country as opposed to a mature market like Middle East or Singapore or Silicon Valley. Karthik, what's the difference?
So there's a lot of difference actually, and the logic is the numbers do not justify the differences. There are more startups that come out from an emerging market, but not often all of them get the kind of success and merit that they deserve. While there are fewer startups that come out from developing nations in terms of maturity of the business model, and they get a lot of success. Primary difference I see is the infrastructural ecosystem, the regulatory ecosystem, the funding ecosystem, venture funds maturity, venture funds willingness to fund an idea versus venture funds willingness to fund a thought, a concept, or a matured business process, competitiveness, the talent pool that is available to mature a startup from a startup stage into a business. There are quite a lot of differences that we see. Being a startup in an emerging market or in a developing geography, to some works out as a boon, but to a lot of them works out as a stepping stone, and that's why the success rate typically has moved on from 1 or 2 out of 100 to around 1 out of 200, 1 out of 300 globally, which is where the challenges are. But in terms of opportunities at the bottom of the pyramid, that's where the opportunities lie, considering that the quantum of ideas and the quantum of solutions that need to be derived is much higher in emerging markets versus the quantum of solutions that are built in developing markets. From a domain and from a functionality point of view, I think that nature of startups in both the geographies are very, very different. I see a lot of AIML startups coming in, robotic and space tech startups coming in from developed geographies and emerging market geographies and developing geographies. I see a lot of startups coming in the core, in the social sustainability, in the impact ecosystems coming in. So depending on where you are, irrespective of where you are, your challenges would continue to be fund availability, maturity, talent availability, building and thriving an idea, and more importantly, finding the right taker to support your idea, not at a startup stage, but at a all the way up to a maturity stage. That's a key underlying thought.
So great. I think that's a very good point. Difference between developing nation versus sort of emerging markets. You rightly said AI, deep tech, space tech in mature markets as opposed to I think the kind of problems you face living in an emerging market. I think that's where you address sort of tackling those issues. Thank you so much, Kartik, for that opening remarks. Next, I'd like to hear from Keshav.
Sure. Karthik, very eloquently presented pretty much everything I had in mind as well. I just like to add a couple of more points with regards to funding, right? So sources of funding in for startups in developing countries are primarily governments or various overseas funds. I've worked with, for example, a couple of funds whose focus is sub-Saharan ecosystems, and those funds are based out of the UK. So there is a lot of overseas money that comes into developing nations at the outset of till such point that developing economy comes up with its own sets of funds. So that's number one. Secondly, there is a lot of government assistance, a lot of government grant that is lots of government grants given to startups. So that is I think one of the other differences. But yes, everything that Karthik mentioned hit the nail on the head.
Oh, okay, so if I understand correctly, a lot of government grants are given to startups in developing nations, opposed to as versus in Silicon Valley.
What I mean is, with regards to the sources of funding,
Sources.
there are lots of grants available from, for example, banks like EBRD, for example, for businesses which have reached a certain level of maturity, or ADB or IFC. They fund businesses only from developing economies or emerging markets.
Right.
So that is the point I was looking to highlight.
Right. Got it. Thank you, Keshav, for clarifying that. Thanks a lot. Tushar.
Sunny, I see it more in terms of institutional maturity of the government in their approach towards the sector. And, I'll give you an example. When Tatas were wanting to buy Chorus, then the UK government stepped in and ensured that the price of Chorus at which it will be sold would be substantially high. And you can't imagine anything like that from developing nations governments, because they are not capitalist in their essence. They are coming from a very socialist perspective, and even the laws, they are very much favoring the socialist mindset. Think of it, when Elon Musk started SpaceX, he got tremendous support from NASA. And NASA's engineer, they virtually helped in setting up what SpaceX is today. And so things are catching on. So Indian government has told ISRO, the monopoly space player of the government, that they have to help startups in the space sector. So these are examples of how things are moving ahead, but still the overall fabric of the government especially is socialist. Think of it, when COVID had stuck roots, and it was a pandemic which was raging quite strongly in the US. Then the Trump administration, they gave 1.8 or to $2 billion to private pharmaceutical companies for their research. Now, if something like that happens in a developing country, there'll be cries of corruption or some taint, or so we are trying to move towards capitalism, but in essence, the fabric which we are dragging along is socialist. And contract enforcement is, I think, a very crucial link in the the difference between investing in a developing country vis-a-vis investing in a developed country. But having said that, just look at the last 1 week's happenings in India, which is also a developing country. First time, a 6-year-old online pharmacy company, PharmEasy, acquired a 25-year-old publicly listed company, Thyrocare. And it did so by raising almost $300 million to fund this acquisition. So this shows the power of technology in the pharmacy space. Ola has set up the world's largest electric scooter factory, and it raised humongous amount for that as well. But so there are many examples of how things are moving in the right direction, but still, from an institutional and government perspective, it is some time before capitalism will catch up with them.
I think that Tushar, I just want to ask. I just want to know more about that pharmaceutical company. Was it a startup acquiring a public listed company? Was that is that what?
Yeah, it's a PharmEasy is a private equity funded company which is into online pharmacy space, and they bought out a brick and mortar company, Thyrocare, which is a 25-year-old company and has retail outlets for pharmacy.
Oh,
Sorry, they have testing centers for pharmacy.
oh, that's a great news for the startup ecosystem in India. Thank you so much for sharing that, Tushar. With you next, I have Harsh. Hi, Harsh.
Hey, Sony. So, Tushar kind of pointed out very good about the government system, right?
Yeah.
Unfortunately, in India, in fact, I'm not sure if many people are familiar. Just about 2 3 days back, there was another law which the government was considering, that any time you get an exit on one of your startup investments, right, they're planning to tax that as capital gains, and they would probably put around 25 to 30% tax on that as well. So just imagine the kind of tax implications which are there. To compare that with other countries across the world, like UK, like Canada, like US, they have startup grants essentially, not just startup grants which are there to support the startups. So, for example, the clean tech company which I'm raising funds for, the Canadian clean tech company, they received $3 million in grants. That
Right.
was the government grant. Not just that, in addition to that, the angel investors who invest in those startups, they get tax credits. So if suppose the investment goes sour and the company does not make money down the line, the amount of money that you've invested as an angel investor, you get proportional tax credits, which gets deducted from your personal tax when you actually do your personal income tax, right? So these are the kind of tax benefits which are being offered, and that is why the countries like UK, Canada, and US are so far ahead compared to other countries. You cannot have a flourishing, thriving startup ecosystem without strong angel investors, right? Strong angel investors are essentially the backbone because they are the ones who take the earliest level of risk, right? VC funds will come at significantly further down the line once you have significant amount of traction. You're doing like 100K, 200K of revenue. That's when VC funds come in. But prior to that, to kind of sustain that, you need very strong angel investment system, and you need government policies to encourage that angel investment system, which is currently not there. So right now, any angel investment which happens, it is completely at the risk of the angel investor. Now, if that thing is kind of mitigated by the government with these tax credits, imagine the kind of jump that we would see in angel investments happening, and the number of startups which we could see coming down in the market, right? So that is one of the major things which I believe which the Indian government needs to work on, and also stop these regressive tax policies, right? 2 years back, they were planning to launch this angel tax, and even right now, to get the exemption from the angel tax, it's an extremely complicated process. Not anyone can get exempt from the angel tax unless you get a specific approval in place. That's a very regressive system. Now, if you're getting an exit from the startup, they brought another tax into the system where you get capital gains tax for the startup exit. So the government needs to become much more open-minded as far as these returns are there.
Oh, I think that's a very good differentiating factor, Harsh. You just highlighted. I mean, sort of. So yeah, I mean that's a huge difference. That's the story. Is it only India that is obviously the issue lies, or it applies to all the developing nations like Latin America?
A lot of them, a lot of them.
A lot
I'll
of
give
them,
you a
a lot of them.
perspective. Latin America and maybe one of the African nations recently passed a regulation where Barclays is the lead banker, and I was involved in a deal in a startup.
Okay.
Barclays refused to take investments from 22 different investors in a geography because of spurious funding regulations, non clear source of funding, round tripping of dollars coming in from either Cayman Islands or BVI. So regulatory frameworks haven't evolved to a particular level. What I used to face in India 12 years ago when I was investing in my own startup is exactly what I face now when I invest in either Nigeria, Ethiopia, or for that matter, even a geography as evolved as South Africa. So there is no difference. It's also not because primarily, I agree with what Hutch said. It is not primarily because of lack of regulations. It's also because of the venture community is not evolved to a certain level. The ability to take risk, the ability to invest dollars, or the ability to see a growth multiplier of 4x, 5x with a gestation period and a risk return ratio of 1 is to 10 is not evolved. What necessarily people look at is how secure my funding is and how secure my dollar is, and you'd be surprised. We had one of those other instances on the call as well. So that's the perspective with which investors come into these days from developing and emerging market geographies. The ability to even incubate a startup is something that is missing.
Hmm.
So,
Great,
Sunny,
great. Yeah. Sure.
can I just add something here? So,
Yes. Yeah.
look at Warren Buffett. There was a report which came recently which said that that Warren Buffett hasn't paid a single dollar in tax since the last 25 years. So, US wants to be a country for the rich and wealthy people, and that's why the taxes on capital gain side, on the balance sheet side, are kept at 0 or maximum 10%. That's the same with Singapore and Hong Kong and all the jurisdictions which want to be a financial center and want to be a center for wealthy people. Now, look at the income tax. In the US, the income tax is 40%. So if you are actually doing a job, you are paying 40% tax. If you are a wealthy guy who's investing and making money from money, you are paying 0 to 10%. So in India,
Yeah.
or any developing country, the problem is that majority of the people are either middle class or poor. So you need policies which balance the country in terms of favoring rich people also, and poor also, and middle class also. So that's where a lot of people, they actually want to have a company in a developing economy, in an emerging market, but at the same time keep a holding company outside India or the developing country, so that they can avail the tax related benefits for the wealthy.
Right. The tax credit is the main differentiating factor. Awesome. Got it. Thank
Uh,
you.
just one more point. One more point I would like to add is the
Yes.
legal system is extremely weak in developing countries, right? Most
Right.
developed countries have a very strong legal system, right? So the when we have international investors coming to invest, they have some sort of security, right? That the government and the legal system will kind of provide a security to the investment. That is unfortunately not true in most developing countries. So that is also a huge deterrent of sorts. In fact, I know a lot of cases in Bangalore myself where there was co-founder conflict which was there, and the co-founder conflict kind of dragged on for 4 5 years, and now the company is zero. They had some good traction for one and a half years. Then they had some initial conflict, and now the company, because of the conflict, the case went to the court. Neither of them relented, and 5 years down the line, both of them don't have anything. So the
Oh,
legal system is fraught with loopholes.
so it's a tax credit favoring the wealthy, and the legal system in developing nations is not supporting the entrepreneurs. Great.
Sunny. Okay, sorry. Just one line. I like to add one line.
Go
The
ahead.
contract enforcement is definitely a challenge in developing countries.
Right.
But having said that, even the legal system abroad, in the developed countries, it
Yeah.
favors the rich. and
Oh,
uh, and just look at a ruling by the US court last week, which said that Facebook should not be split up. There was no antitrust action which the court ruled. So things are very, very pro capitalism in these developed countries.
wow. Sorry. Vandana, Anil, I'm coming over to you now. Sorry. Vandana, over to you.
So, I have pretty much the same thing to say. So, one
Yeah.
of the mechanisms employed to nurture small firms is that of acceleration, right from Series A funding to the attainment of market success. Now, accelerators assist startup ventures to become fully operational and sustainable enterprises, particularly in developing economies. The primary role of a startup accelerator is to bridge the gap between newly founded SMEs and their potential investors. Now, startups in developing economies fall short of reaching their optimal potential, and this has been substantiated by the recent in depth studies conducted by Harvard. And according to the research, venture enterprises in developing economies that were admitted to accelerator programs proportionately performed better than their rejected counterparts. Now, in developed economies, the private sector accelerators typically offer an equity investment in the form of a seed funding, in addition to the mentorship and other services, which is usually in exchange for a percentage ownership of resulting firm. Now, contrary to this, the relatively low availability of equity investments in developing economies has impelled, entrepreneurs to join accelerator programs as a probable path towards raising funds for their business. So, this is
Yeah.
what I do.
Thank you, Vandana, mentioning that, because Karthik also wrote incubators and accelerators. Anil, I would like to know from you. Sorry, I haven't come to you yet. So what differences do you see in terms of a startup having access to an incubator in India? Let's just take an example between India and Silicon Valley. And yeah, over to you, please.
So India actually has evolved. You know,
Anil, you there?
Oh,
You're
sorry,
mute.
I was muted.
It's okay, no worry, no issues.
No, so my view is slightly contrary, to my friends. India actually, is evolved and is evolving. Today, if you look at incubators in India, are I think fairly decent in shape and size and in numbers, right? I remember visiting some of the top incubators almost 10 years back, in America, North America, even Singapore.
Mhm.
And then I used to look back, in India, where we didn't had, rather rather not a single good incubator. But if you look at today,
Mhm.
the initiative taken by government, right, especially central government, a lot of funding has been provided to incubators for setting up their operations, right?
Right.
Even to do that entire office setup, and even building team, building mentor network. And this they have done it for last 3 or 4 years. Right now, coming to next level, the another corpus has been created now to support startups identified by this incubator, to get a funding of almost around 50,000 to $100,000, which is not a small sum. So India actually is at a very interesting stage for entrepreneurial journey. I don't think I need to be scary about non-availability of anything, but if I have right you know information availability, then I can very well go set up my startup, get necessary grants, incubation. And incubations have evolved. I'm personally on board of 3 incubator in India, and this out of those 2 incubators are in tier 3 cities, and quality is is very good, right? So India has evolved, no doubt. A lot of startups are growing, plus one initiative by government has helped many entrepreneurs who wouldn't had an access to facility to leave their dream and aspiration. So today, if you look at incubation facility and centers in India, is very good.
Okay, great. I mean, obviously, I think India has evolved, but as Vandana and Karthik rightly pointed out, access to incubators, generally speaking, about developing nations, that's a challenge for startups to have access to
I
that.
don't
Besides
know.
talent,
I
sorry,
don't agree, Sony. India, there are more than 100 incubators, man.
Karthik and
Developing
Vandana, what
nations,
do you think?
yes, yes,
So,
there are challenges.
so
But if I
I agree with Anil, but I would look at it very differently, Anil. India, if you might call India a developing geography, but not from a VC point of view. When you look at a VC point of view or a startup point of view, developing geographies would be Nigeria, Ethiopia, a little bit of Latin America, Brazil, Argentina. If you move down south, you'd see Indonesia, not the Philippines, not Malaysia, Taiwan. In those geographies, you'd struggle not only to find incubators, you'll struggle to find even the right talent pool. When I screen applications coming in from Nigeria, I get them on
Mhm.
an email with ideas written on a piece of paper, and somebody wants to get onto a call with me. And when I reject that call, the first answer is that I come from a small country, so you're not supporting me. The regulatory, it's not the regulatory network only. It's about maturity of an idea. What we are used to, let's say, as sitting in the Middle East, when I look at investments coming in from established business houses from Europe. I see all the way from an elevator deck to a pitch deck to a business flow to a fund statement and etc. But when an idea comes in from an emerging market or from a developing geography, it comes in an extremely shabby manner, and it is me who needs to put that together into a viable business solution and make a business out of it. The second challenge is when let's say, even if I take a quantum leap into that geography, I would not find anybody else to share the risk with me. Even a local investor in the geography doesn't want to share risk with me. So when I go out and invest from Middle East into, let's say, Nigeria,
Yeah,
and if somebody wants a Series A funding of around, let's say, $300,000, $400,000, I would
yeah,
never become a lead investor into that geography. I would become a secondary investor. Finding a
right.
primary investor into that geography is challenge. And then Even if I go into a Series B funding, I need to place somebody as a CEO for that business. When I place somebody as a CEO for that business, I need to conduct approximately, I just funded a startup in Pakistan. I had to conduct 96 interviews to find one candidate for that role. So it is impossible to find the ecosystem thrive. What you talk about India versus what I talk about India 10 years ago when I started my investment journey in India as a startup founder are very, very different. I remember I had to go to 12 VC houses to get even an appointment. And I had been rejected by 34 because before Helion decided to fund my startup. So it's not something that comes easily, specifically when I was in the e-commerce, fashion e-commerce space. From there, today India has moved to a very different position where venture funds are sitting cash flush and are looking for startups to invest dollars in. So it's a very different ecosystem. The only thing that's not changed in India, maybe to a certain extent, is the regulatory network. If it was as protected as Singapore is, then I think Indian investments and startup situation would have been far more evolved.
I think you're right,
See,
Karthik and Anil. You just, oh, sorry, Anil, go ahead. I think Karthik just said that, yes, India has evolved. Like he was an entrepreneur 10 years back. I was struggling to get
No,
funded.
I agree. I agree with Karthik. So I had been investing, for almost now 15 plus years, right? And I have seen this, Indian ecosystem. I don't want to comment on, all developing countries because India is still developing country, right? I think we can resonate with other developing countries, but some steps have been taken by government, and now, ecosystem is evolving, right? Flipkart, which was incorporated some 16 years back, see where it is today and how ecosystem has developed. So it takes time, right?
Yeah.
It's not, the investment thing will never happen overnight, right? What I used to see 20 years back, as a potential investor, and what I see now, it's totally different, right? So those days, there were handful of investors who were getting opportunity to invest, right? No wonder, Karthik, you had to, go through so many investors. But today, if you look at, there are thousands of investors. While I'm talking to you, India itself has 600 registered VC funds. It may be different category, but
Yeah.
when I started my registered my fund, there were just hardly three VC funds. I'm
Right.
talking 10 years back. So things are moving, maybe slow, maybe
Yeah.
bit hard,
Yeah.
but in my view, it's we would be going through exciting time, right? There are
Absolutely.
challenges,
Yeah.
but certainly from investors' perspective, it's very very encouraging and interesting times.
Great news coming from India. Thank you, Anil, for sharing that. Tushar, you would like to add some points
yeah,
to Anil? Please go ahead.
yeah. Yeah, I would like to actually add the fact that this government
Yeah.
has done has done so much for the startup and investment ecosystem. They created DPIT, they created Startup India, Invest India. They created a fund of funds with SIDBI for 10,000 crores, which is almost 1.3 billion dollars. And recently they gave doles to incubators so that they could be set up properly. And they created Atal Innovation Missions, AIMs, which are entrepreneurship cells, which incubate. They also function as incubators across length and breadth of the colleges and educational institutions. So I actually agree that work has been done in this field from an institutional perspective. Having said that, anybody who wants to have a secure way of monetizing their work in the startup space, with the increase in number of funds, there has been an explosion in number of startups. So we had 30,000 startups 2 years, 1.5 years back registered with Startup India. Today we have 50,000. So we
Right.
added almost 20,000 startups in 1.5 years.
Right.
So that's what I wanted to add here.
Yeah, absolutely. That great points. I have Keshav as well lined up. Keshav, go ahead. You wanted to
Well,
share something?
yes, just a couple of points to what Anil and Karthik mentioned. I think if we go back maybe a couple of decades and see the entire transition of India as a developing economy and to India where it is as a developing nation, plus I would call India a developed startup ecosystem
Right.
at this point in time. but it is still a developing country. But the startup ecosystem is far more advanced than some of the other countries. It's in fact at par with some of the large countries as well. But if you look at the transition that has happened over the last 2-3 decades, you can see that a lot of money flowed into services, and from services, products were built, offshore centers were developed, and subsequent to that, people got out of the comforts of their corporate roles and then started investing and founding businesses, etc. We are yet to see that kind of transition happen in some of the other developing economies, because the focus goes back to the Maslow's law of hierarchy, right? Where you're so focused on the essential needs that you would look at earning first before starting a business. And like Karthik mentioned, the entire ecosystem is so underdeveloped that hiring someone takes months. The talent pool, the appetite tourism, the government regulation, all that is still being developed. Even from an exit perspective, right? When you invest in a startup, you're always looking at an exit. Even from an exit perspective, there are not many large corporates or other funds in the region which can buy you out. So it is very organic in nature. And I suppose still there is external funding, or overseas funding, should I say, flowing in. And again, it has to go through that entire cycle of founders rounds, then followed by angel rounds, followed by VC rounds. It is going to be challenging.
I think very good point when it comes to Kashyap about exiting as well out of a startup fund. Thank you so much. I'm not missing out. Harsh, you're going to leave in 10 minutes. Would you like to share any other views on this, or is our ventures investing into a startup outside of India that you'd like to share?
Yeah, so currently we do invest outside India, but mostly in more mature and developed economies, right? Because as Karthik pointed out, I have faced a lot of those challenges as well, right? So I get messages from startups from Nigeria and a lot of those less developed countries, and even Middle East, right? We like to bundle Middle East, but you have the Saudi Arabia and Dubai, which are highly developed, and there are still countries like Kuwait, which is not as developed, right? Kuwait, Jordan, they're a part of the Middle East, but they're not that developed, right? So even within Middle East, there's a huge differentiation. And I get proposals from them, and they are still very not as prepared, not as polished, and they're looking for funding, and right out of the bat, they ask for huge amounts like 150K, 250K, with just a kind of a PDF or a Word doc with just the ideas written. So these kind of challenges are there as well. So that's why you need a much more a basic level support, a much more granular level support right at the ground level, so that startups from these countries and founders from these countries can get that basic understanding that is needed, what it takes to go to the next level.
Right. Thank you so much, Harsh. Sorry, go ahead. Who else?
Can I add something here, Sunny?
Yes, go ahead, Tushar.
So, the startup exit ecosystem, so exits have forever been a problem in this country, especially in this India, because just as Google and Facebook lap up 300 companies each every year, we didn't have these kind of players who used to acquire. But things are changing from that perspective also. Look at Tata's; they bought Big Basket. Reliance bought a huge portfolio of Kalari, the venture capital fund, including Milk Basket and Urban Ladder. And Geo, which is a company which has modeled itself on these startups, and they got $34 billion of funding from Facebook, Google, Qualcomm, and Abu Dhabi Investment Authority. So the ecosystem is evolving, and earlier these startups, they were not able to list themselves on these stock exchanges in India because they had losses, and the SEBI laws, they didn't allow companies with losses to list. But now Zomato is listing, Paytm is listing, and so again, from an exit perspective, things are improving quite a lot.
Oh, that's
And
great news. Yeah.
one more point regarding exits, which you mentioned, right? So as Tushar pointed out, Apple and these companies, they gobble up and acquire early stage startups, 100, 200, 300 every year, right? they are not afraid for giving good decent valuations and good decent exits and acquiring those companies, because
Right.
what they are saying is they are getting that quality talent into their ecosystem. On the
Right.
other hand, in India, when you look at acquisition, they are
Yeah.
always looking for getting a good deal, like a distress acquisition. Unless the company, goes completely at a very distress level, reaches the NCLT stage, and they can buy it at an extremely low valuation. That is the mindset when you look at M&A, and that mindset is completely different from the mindset which is there in US and UK. They don't mind paying extra because they are not buying the company or the product. What they are buying is the people. The people come in with 2 to 5 years of lock-in period, and that for them is far more valuable than just the product. Whereas the M&A approach in India is extremely on the other end. So even if the company is doing very decent revenues, like 50 CR or 100 CR revenues,
Yeah.
the buyers who are looking to acquire the company, they
Yeah.
would not look at giving a higher valuation. They will look at let the company go to distress. We'll buy it from NCLT for scraps. So that is a huge mindset shift
So,
which is required.
Harsh, I have a view here. The good point is that things are changing, right? I will just make a small correction that when this kind of deals happen, they always speak about fair market value. So they will not be going by higher valuation or lower, but it's more about fair market value. But what has changed in this last 1 year at least, we are seeing that not only big corporates but many other corporate house in India have started looking at acquiring company. I can say it may be less than fair market value, but it is a reasonable because non-existence and something is very good, right? uh, I exited one company to Geo. I exited to one company to Netcore. I'm in process of now exiting to one more company, to Indian listed company. The good part is that the Indian corporates have now have accepted that if they don't act, they will be the loser, right? So yes, that this distressed buying was happening because there were no buyer. But now when things are looking good, people know that if I don't do, I'll be the only loser, right?
Mhm.
Look at what happened to Big Bazaar.
Correct.
What happened? What
I don't
happened to
have
people?
Yeah.
to. Well, of course, they had opportunity to invest, and in Flipkart at much lower valuation. Missed out because they thought it's non-happening thing. And now you see where is Flipkart and where is Big Bazaar,
Hmm.
right? Things are
No.
changing. People have accepted that this new age economy business are going to stay, and it's better to partner with them rather than ignoring them.
Yeah. But you're still at a very early stage. As in, you're right. There are a lot of exceptions happening. Just for
It's
example,
happening. There are so many exits happening, Harsh. I'm sure even you would have so many. Don't worry.
I haven't come across that many till date.
That will happen. Don't worry.
But
Identify good startups.
I would let me add a little bit. One point here is we
Sure.
continuously
Go
keep
ahead.
talking about one geography, but trust me, our geography that we continue referring is a very hybrid model, primarily because of the technology pedigree. It's got VCs interested. But when you look at comparable economies in terms of GDP and per capita or purchasing power parity, Indonesia, Brazil, Philippines, or for that matter, even South Africa, hasn't got the venture funds community developed. You come across what the VC industry calls as a generation phenomenon or just a generation paradox. It takes one full generations of startups for venture funds to get comfortable, because it is very difficult to fund a startup which doesn't have any level of incubation and support or even maturity of the processes in it, and hence after 12 years today we are all very confident about it. But look at where the world is moving. The chancellor of exchequer in the UK is an old friend of mine. He's given me a perspective about a regulation on investment coming in through or a regulatory coming in regulation coming in about securitizing and ensuring a startup's investment in series A and pre-series A funding to around 34-35%. Now that is what you're talking about, is you're de-risking a startup and creating to the business, and at the other end what you're doing is exiting a startup with a sub 12% interest coverage or sub 6% capital gains coverage. That necessarily allows the entire dollar to move in all possible circles. Compared to that, what we look at is a tax haven that is created in developing geographies, but it doesn't necessarily materialize because the bar has been raised to such a level that
Yeah.
startups, even in an incubation or post incubation stage,
Yeah.
necessarily don't reach this. They wither before that.
Great points. I think good points, Karthik, over there. I think Vandana, I'd like to ask you because you've lived in Indonesia, you worked you had a family office in Indonesia, also worked in Singapore, now India, also GST Ventures, US. So, what kind of differences you've seen because you lived in what various countries in your lifetime?
See, I think, the gap is there, definitely, in terms of culture, in terms of diversity, in terms of, talent, in terms of, in developing countries, it's very difficult to get the licenses, the patents, etc. So the gap is definitely there, but with adequate mentoring and proactive guidance, I think accelerators tend to imbibe a zeal for creating far-reaching solutions that embrace worldwide aspirations and businesses for international scene. Now, this plays to the advantage of third world country entrepreneurs as global solutions reportedly, Gartner has much more investment and acknowledgements from investor communities as compared to localized solutions, which are often deemed to fail. Now, accelerators do help with the narrowing down the equity gap between the ventures in developing economies and those in high income countries. Now, in Indonesia, also, there's a lot of cultural differences. It is Muslim dominated. It is the startup funding is not easy there. In India, there are other issues. And in Silicon Valley also, there might be issues which we are not aware of. So, this is what I feel about the entire thing. Also, when everybody was talking about funding in India, I had a short thing to say as well. Funding in India, unfortunately, fell by 29% in 2020 compared to 2019. There were multiple reasons: investor uncertainty due to the overall economic uncertainty and restrictions put on direct Chinese investors to Indian companies, freezing their funding. However, some startups were quite successful in specific sectors. That year, test preparation startups like An Academy saw a huge jump in funding, which was $666.2 million, up by 538%. Alternate lending sector startups saw a 67% increase for funding, which was of $704.5 million. Mom and baby care segment had investments explode by 3,031% for 531 startups, raising 327 million. And the year before, no startups in these sectors were funded. While the investment was lower in 2020 than 2019, it
Sorry to
was
interrupt you,
higher.
Vandana. We are running
Yeah,
short of time. 6 more minutes
yeah,
to go, and I have so many messages. Everybody wants to have a hard
okay.
stop. We can
No
continue this
worries.
discussion. Sorry, I'm really sorry. Very sorry
No,
to
no,
interrupt you.
no, no, no,
So,
no, no, no worries.
sorry, Kartik and Keshav. Before wrapping up, every startup needs a businessman to grow. We always find enthusiasts, but the
Yeah.
fabric of startup requires time. Keshav and Kartik, quickly, what does that mean?
So let me put it this way: you come up with a fabulous idea of starting a Olo or Oya, Ola cabs, for example.
Yeah,
Now, he came up with a beautiful idea of starting an Ola cab, but if he did not had the entire ecosystem of businessmen and professionals around him, he wouldn't
yeah,
have been able to build it. You go to a developing geography like, let's say, Nigeria or Indonesia, try putting together a business team together. You'd have fabulous ideas, but you'll struggle to put a business team together, and that is where the startup fails. Dollars are not going to create businesses. It's the talent pool at the ground and the and the functionality of an SOP in a developing geography. When you ask a startup manager or a startup investor or a startup founder about questions on growth and questions on projections, necessarily he fails. It's only idea which is necessarily not always backed by aspirations, abilities, and ecosystems, which is where the developing geographies face
Great.
challenges.
Thank you, Karthik. Keshav, quickly, on that note, what Karthik said, you wanted to ask something. You're on mute.
Yeah, sorry. I think it's all down to the mindset of the society.
Right.
Because, about 20, 30 years ago, if you notice, people who wanted to become business people or entrepreneurs
Yeah.
were asked to, go back to the safety net of a corporate job because there's stable income, as opposed to, where we are right now, where, teenagers are turning into entrepreneurs. And I suppose, like you said, it's all about that generational shift in mindset. So, yeah.
Absolutely. Thank you. Tushar, Flipkart. Yes, Anil's point.
I have great regards for Adil and Karthik and Keshav. But Flipkart had a holding company in Singapore where you put up Sunny. So, so Walmart had absolutely no problem in buying out the holding company because of contract enforcement, because of and so I think that was one factor why $21 billion. Otherwise, it's kind of with the risk profile the developing countries carry. It is not an easy decision to take. I just wanted to say that.
Okay, great point.
I would add to this. I might not agree. The kind of market share that Flipkart's built in India and the kind of geography that we are talking about, there is
Yeah.
still space for two more Flipkarts and one more Amazon to grow in a geography that we're talking about 1.3 billion people. Considering a geography like UAE, which is 1/30th of India, internet penetration and per capita spends on digital space is 7 times more. So there's a lot of room in India for businesses to grow. If there were two more Flipkarts to come, there'll still be space.
Was it the
Yeah, but
mindset?
then they need
Or
to,
what is it?
flip
What's
to.
the challenge?
It's digital penetration. And I was talking to, and you would be surprised, Kunal Bell and me had a conversation last week on Snapdeal, going into Town B and Town C's and his entire value ecosystem, value e-commerce space. I was surprised when he spoke about starting an entire chain of stores in level 2 and level 3 cities. He tells me about 72% of the e-commerce that he does comes from
Yeah.
non-branded businesses. There is a lot of dollar at the bottom of the pyramid in India compared to where we live today.
So I'll just add something here, Karthik. So the thing is, Shopclues tried a similar model, but they had to fold back. So so a lot is being said about the bottom of the pyramid, but it's a very it's not an easy space to build a business on.
So, bottom of the pyramid is a beautiful thing to speak, but very difficult to achieve. C.K. Prahlad wrote a book about it, but not a lot of people have gone there.
Right.
Okay, great. Thank you so much. This is very engaging panel. I loved it today. I hope everybody also had a great time. Let's just quickly take some closing remarks because everybody has to go, leave. They have meetings after this. Karthik, over to you.
I completely believe in the power of developing geographies because that's where some of the smartest ideas comes in from. Most practical solutions come in from there, and the growth trajectory. It's a bamboo shoot philosophy that developing geographies would come in, and that's where democratization of an idea happens. So we would continue to looking out for talents in that geography. The mindset of the geography and the mindset of the investor both need to change to dovetail with each other. One hand cannot clap in a developing geography. Both have to come together.
Absolutely. Thank you so much, Karthik. Anil.
So developing countries, in my view, offers a lot of opportunity because there is requirement for infrastructure development. Opportunities are there. People are looking for more better solutions, and hence innovative solutions get opportunity to scale up fast. I'm seeing that in India. So I'm a firm believer that developing countries will offer more opportunities compared to developed. Of course, we have all deep tech solutions coming from developed, but real solutions for real problems we will only see from developing countries, and a lot to gain. So quite gung ho about it. Thank you.
Thank you, Anil. Thank you, Anil, for that closing remarks. Sorry, Keshav.
Just reiterating that developing economies is where the
Yeah.
next set of unicorns will come from. Quite bullish on it. You can reach out to me on LinkedIn and Twitter at ckira.adya. And looking forward to catching up again. Thank you.
Fantastic. Thank you, Keshav. Really appreciate your presence today in this panel. Tushar, have I taken? No. So Tushar, over to you. Vandana upcoming.
I am available on my LinkedIn, Tushar Kansal. There are 3-4 other Tushar Kansals. Ignore them. They are of no use. and
I will have to have time to share.
So, and available on my website, consultancy.com, and also my email, tk@consultancy.com. Thank you so much, Sunny. Thank you, all the panelists. It was lovely interaction today. Thanks a lot.
Awesome. Thank you, TK. Vandana.
So thank you for having me here. I could be reached on LinkedIn or my website, www.convanto.com.
Okay, thanks a lot for your time today, Vandana, Tushar, Kartik, Anil, Keshav. I'm going to catch you again on another panel, on another exciting panel like this. Till then, take care of yourself. Bye.
Bye-bye.